Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We're just about to start our earnings this morning. We got double earnings for you this morning. On the extra channel, we are doing Intuitive Machines, ticker symbol LUNR. If you are there on the extra channel, if you are here on the main channel, we are doing Home Depot earnings. So the Intuitive Machines earnings will start in 30 minutes, and on the extra channel, and the Home Depot will start in an hour on the main channel. So we're going to run some polls this morning and update you with everything that's going on. So stand by for that. Welcome everybody over there on TikTok. Good morning to all of you. Lovely to have you here this morning. It's going to be a busy morning when we do double earnings. It is always a busy morning. All right, let's make sure everything is working as it should be. Yeah, we've got everything coming through everywhere. Looking good. Let me just check around the studio. Yes, everything is fine there as well. Welcome everybody. Right, let's set up this morning some polls to run this morning. Let's do that now. First thing we need to do is update our Stream Deck. There's been a recent update, which now means every single day I have to re-add my accounts. So bear with me one moment. It's something I have to do every day for some reason. Didn't have to do this before, but we do now. Okay, let's add another one. And the extra channel as well. Here we go. YouTube extra channel. Okay, we've done that. Okay, we're all in. Now then, let's see if this works now. Just a new thing since Google updated. It very often happens. Let me see if the links are working on both channels. And yes, they're now working. Right, so let's set up our events. So we've got, if you just tuned in on the extra channel, we've got Intuitive Machines, ticker symbol Luna. We'll go live in about 20 minutes and 25 minutes. And on the main channel, Home Depot is going at an hour from now, 57 minutes. But we do have to be here early this morning because we've got PPI, we've got inflation figures. We want to be early for that. We don't want to miss all that. Very, very important morning. Right. So first of all, then let's do our Luna poll and information. So that's what we're going to do now. We're going to go over to X. I'll give you all these links in a moment on the screen, so just please bear with me as I do them live on the show. Luna. So here we go. Luna Intuitive Machines, live now on YouTube. Whoops a daisy. YouTube. Join the investors. Why watch alone? Okay, there we go. Let's give it the link. There'll be a poll in a second. I'll give you that in a moment. So LUNR, Intuitive Machines as well as a hashtag. Martyn Lucas Investor. Okay, we've got all that. Let's add the image. There we go. Okay. So we're going to give this a poll on X. You might like to vote. Is this a buy, hold, or sell for you? Please vote in X poll. I'll give you the link in a moment on the extra channel and the main channel. So just please bear with me. In fact, I can give it you now. I'm just posting it now. It's not there yet, but it'll be there in about 30 seconds. If you want to vote on this poll, it's in the links in the chat. So is it a buy? This is Luna. Hold, sell, or undecided. Okay, we'll run that poll for 7 days. Let's see what you say during the call and afterwards. Also, I'm going to ask you this question here now. Will they beat or miss? Please vote in X poll. There you go. Let's add that as well. Beat, and this will be just for 1 hour. Miss, obviously, because I will know the answer shortly. I'll make this for 1 hour, or undecided if you're unsure. There you go. All right, there's the poll. So I've just given you the link in the chat. On the extra channel, you can now vote on Intuitive Machines Luna. On the main channel, we're waiting for Home Depot. We've got a little while to go. Intuitive Machines just popped up a little bit. Let me see if we've got some numbers in yet for it. Nope, no numbers yet. No numbers yet. Massive miss on the last earnings. So this could be a very dramatic move for the stock today if we beat. Okay, there is the poll on X. Let's now put it on Facebook. Intuitive Machines. Let's see if they've got machines. Let's see if they've got a Facebook. There we go. We've got a Facebook page, which we'll tag into as well. I've got some friends there, so we'll do that. We'll also put it on. We'll also put it on Instagram. I'll give you all the links for that if you want to go and follow me on Instagram. There you go. Let's drop in the image. This is on Instagram now. Okay, there we go. I've got a few friends here with Intuitive Machines on Instagram, so I'll tag them in it. There we go, that's that. Same now on Threads. Let's put the event there. And I don't think I've got any contacts on Threads, but we'll do it anyway. Intuitive, because it links to Instagram, doesn't it? Intuitive Machines. Okay, let's post that. Okie dokie. Now, if you want to go and comment on that, you can. That's now there for you. The poll's there on X. Let's get your votes in. And we're there on Threads as well. I'll just upgrade this as well to the group on Facebook. If you want to be part of that, I'll just give you the link there. There you go. Let's put this on the group. Okay, that's now done. We've got 20 minutes to go before the call starts. So thank you very much for joining us early. Here on the extra channel, we are covering Intuitive Machines, Luna earnings. They'll be coming up shortly. And we've got a poll running. I can already see people are now voting. Thank you very much, Mike. Thank you very much for getting involved there. Excellent. I'm now going to do Home Depot, which is here on the main channel. Welcome to everybody on the main channel. We're now going to do Home Depot earnings. We give you the polls and everything else. So let's do that now. Let's visit X first of all. You'll have a link in a minute to be able to vote. Home Depot live. Whoops, live now. Whoops, a daisy. On YouTube. Join the investors. Why watch alone? There you go. Ow, what did I do there? you go. Didn't know I could do that. Why watch alone? Okay, let me give you the link to this event as well. Welcome everybody who's just joined me. If you just tuned in, just consider subscribing. Don't forget, tap the like button as well. That'd be great. Whoops a daisy, press the wrong button there. There you go. It's very early for me this morning. I'm up extra early because of these extra early earnings, as requested by the members. That's why I'm here. Let me copy the URL in there. Okay, so HD Home Depot, and then my tag Martyn Lucas Investor. All right. Okay. Let's add the image. So Home Depot, let's go and search for that. Home Depot. Love search on Mac. It's really great. Use it all the time, every few seconds. Right. There is the event posted there. Here is the X. If you want to go and vote on these events on X, you can. Here's the poll now coming. Is this a buy? And we'll be running these through the call, hold or sell on for you. By the way, if you've just tuned in on the extra channel, Intuitive Machines is just 15 minutes away now. Home Depot is on the main channel. You're in the right place. Stay with us. We'll be checking the audio in a few moments. Please vote in X poll. Okay, there's that. And buy, hold, sell, or undecided. There we go. We should run that for 7 days. Excellent. And we'll also drop in, is it going to beat, are they going to beat or miss? So will they beat or miss? Please vote in X poll. All right, and let's add this here. Beat, miss, or you're undecided. This one also for 1 hour. There we go, 1 hour, and post that. Okie dokie then. That's now done. Let's tag this into Home Depot as well. Done that one. And Intuitive Machines, we'll do that for them as well. Quote, Intuitive Machines, there we go. Right, we're all done there. That's taken care of X. Let me see the notifications. Just got a new follow from Mapul. Thank you very much indeed for following me. Appreciate that. I'll do the same thing now on Facebook. Tag in Home Depot. Okay, done. Same on Instagram. Just got 14 minutes to go now for the call to start for Intuitive Machines, Luna. Stick with me. You'll be getting everything here. Home Depot. There it is. Let's do this. We'll tag in Home Depot as well. Home Depot. Right, all the polls are running now if you want to vote on those. And finally, we'll be doing it on Threads, and then we'll all be set. Home Depot. Now, of course, the big news is in 15 minutes as well with inflation. We'll be watching that as well. At the moment the call begins, we'll be covering that. The markets are going to be violent, up or down. It's not going to be a steady day. It's going to be a dramatic day. So I hope you're prepared for that. It's going to be some moves this morning, I'm sure. Right, we are done. That's all the events set up for this morning. Now, tonight, I think we have, yes, we do. We have ACHV after hours tonight. That's after hours tonight. Okay, all the polls are there. I'll give you the links again. There is X for you if you want to go in and vote on the polls. We're all set. Right. Now we have to get ready for inflation. We also definitely need to do an audio check on Intuitive Machines. If you've just tuned in, I'm going to make sure now everything is working as it should be. But first, a quick sip of tea. Okay, we just had a big move upwards on the S&P, as you can see. Big move just there, all of a sudden. I'm now up nearly 1%, $642. Very nice indeed. Right. What was I going to do? I was thinking that was it. Couldn't think what I was going to do then for a minute. Got to turn this on now. Since there's been an upgrade, I've had to reassign things fresh every morning. It's a real pain in the ass. Got to do it for my cameras. I got to do it for all kinds of things. Anyway, these are the challenges. Right, let me just check now for Intuitive Machines. Over here, this is where it's going to happen. You can see it here. There you go. There it is. There's the audio coming through. You are in the right place, so bear with us for that. Okay, so everybody on TikTok, good morning to you. Now then, let's have a look. Luna, have they beaten yet? Let's have a look. Do we have the numbers? We don't. Do we have the numbers for Home Depot? Let's have a look. I'll also check my feeds on Bloomberg as well. Oh, yes. Great. They've beaten, and it's a good beat. Estimated 450. It's a 467. Home Depot has beaten on earnings. This is good. This is very, very good. Very good. I like it. That's a good start to the day. Let's check my Bloomberg feeds. What are they saying?
Few years, it certainly is not inspiring a whole lot of confidence.
Well, for so many of these companies, realizing that they couldn't go at it alone in the Chinese market, they did these JVs. And of course, GM.
We're talking about chips in China. It's not relevant right now. It will be shortly. Okay. Now then, we've got inflation as well. We've got PPI due in just 10 minutes. We will get an update on that, but it will be, we won't be able to say anything about it because it will happen exactly as Intuitive Machines start. Intuitive Machines will probably be 2 minutes late. That's normal for them or anybody actually, but the PPI won't be late. That will be out imminently. So that's going to happen. Core PPI as well. Forecast of 0.2 PPI month on month and PPI month on month for July. We're looking for a 0.2 or a 0.1 really. What we don't want is a 0.3 and core we don't want more than a 0.2. All right, so that's what we're looking for. Welcome everybody. We're 9 minutes away from the earnings and the PPI. Okay. Tomorrow we have the inflation rate. Today it's the PPI. So a lot going on. PPI is 8 minutes away. Time to tell. We're covering it live. How are you, Martin? From a sunny Southampton, Malk, UK. I'm very well indeed. Thank you. How are you this morning? I hope you're well too. Hello, Mike. How you doing? Good morning, Stephen Lewandowski. Good morning, all. Zach say Home Depot is a strong company in the S&P. Yep. My portfolio, as you can see, is up. I'm now... in fact, I need to put Home Depot in here. HD Home Depot there. There you go. And my overall balance now is 101,668. My all-time high is 107. I should get there quicker now, though, because I've got a lot more than I had before. If things go up, that is. If they go down, I'll go down a lot quicker. CPI, we're waiting for it. I think it will be hot, says Time Mattel. We hope not. Good morning from Stephen Lewandowski. Hello, Malpool Elaine Sathosa. Good morning. You're the person who just followed me, aren't you? On X. I just thanked you. I think so. Notifications. Yes. We've got 7 minutes ago. I just wanted to put a thank you to you. I like to recognize all of our members and family. Look, Mapul Elaine Sathosa. Thank you very much for following me. Welcome to you. Lovely to have you here. Thank you very much. Okay, 7 minutes to go for Intuitive Machines Luna on the Extra channel. So if you're over there on the Extra channel, you are watching Luna Intuitive Machines, which goes live in just a couple of moments. Thank you very much. So welcome to all of you. If you are, in fact, I'll give everybody the link now. Let me give everyone the link for this. This is Home Depot earnings on Extra. Home Depot earnings. Earnings on main. Okay, and I'll now go over to the main channel and give everyone the Luna earnings. LUNR earnings on Extra. There you go. Everyone's got everything. Could everyone tap the like button, please? Subscribe on the way in as well. It really helps the channel. Let's read some more comments. Hello. Home Depot said customers are sluggish on spending to remodel homes. They lowered the rest of the year's expectations. Links in links for YouTube. Thank you, Mike. Let me go there right now. 5 minutes to go before Luna starts. Thank you very much indeed. What have we got here? CNN, Home Depot issues a warning about the economy slowing. Home Depot says consumers are feeling crummy about the economy and they're dishing out less to remodel their homes. The home improvement giant, a bellwether of consumer spending and the housing market, lowered its sales expectations for the year. However, it did beat though. It said customers were spending less on home improvement projects, pressured by higher interest rates and concern that the economy is getting worse. Thank you very much indeed for sending that out. I'll tell you what I'll do. How much time have I got? I have got time. So what is the time? The time is 24 minutes. Let me just do it quickly. Home Depot 24 mins. Whoops, a daisy. 24 mins. In fact, I don't have to rush, do I? Because I've got Luna on the other channel. I can do it in a second. So I'll tell you what I'll do. I'll actually wait. So I'll call that 34 minutes. I'll do it in 10 minutes. I'll get past the earnings for Luna, then I can come back, can't I? Thank you, Mike. I can actually do that a bit less rushed. Okay. Thank you, Mike, for sending that in. I'll do that in a second. Right. Intuitive Machines, we're just 4 minutes away. Luna, here on the main channel. We are half an hour before Home Depot, but we are 3 minutes away from PPI. Inflation figures tomorrow, pricing figures today. Right. A lot going on this morning then. Very, very busy morning. Let me switch over to the extra channel now. At the end of the Luna event, we'll bring you back here to the main channel for the remainder of the show and what's going on with the opening bell. So let me make sure we're all good here. Stream settings, yep, all good. We'll keep that open there. Right, so we've got 2 minutes to go now before we get PPI data. Markets are going to move, I think, violently, either up or down. It won't be just a steady day. I think there'll be some movement, so get ready. You're either going to buy or going to sell, or you're just going to ride it out. I am doing absolutely nothing. It would have to go down about 5%, which is not going to happen for me to buy more. And if it goes up, then that's great. I don't do anything either. Right, Intuitive Machines. Let's get ready. We are just moments away now from the call. Let me update the screen. There's already updates coming through. There you go. Intuitive Machines. We're going to listen in. It'll probably be 2 minutes late. We'll get the CPI data first, I would imagine. So I'm going to be listening in now to Intuitive Machines. Let me just mute the audio. You don't want to hear that. Okay. And we've got 1 minute to go for PPI. So we're going to be watching the earnings start. And we're going to be watching PPI as well. Here we go. We got 55 seconds. Let's have a look. We are looking for forecast of PPI 0.1 or lower. We don't want 0.2 we could live with. 0.3 we don't want. And in core we've got 0.2. We can live with a point. We want a 0.1, but a 0.2 we can live with. Even a 0.3, but we don't want a 0.4. That's what we're looking for, and we're going to get it in 20 seconds. Then we'll follow with the Luna Intuitive Machines. They'll be a couple of minutes late, at least I hope so we can get the PPI out. Right, Luna is now, it's their due time, but they'll probably be 1 or 2 minutes late. So that's okay. Here we go. PPI any second. Get ready to watch the market. It's going up. Here we go. 0.1. 0.1. Core is flat. Ooh, it's coming lovely. It's coming great. The market's going to explode. There it goes. Look at that. It's going to be a great day. Inflation is falling. Prices are falling. Look at the market go up. There you go. Days like this is why you remain in. Fantastic. PPI 0.1. Core is flat. Core PPI 2.4 down from 2.7. PPI July 144.6. This is great. Great. The markets are piling up now. Here is Intuitive. Here we go. We're going to start now.
At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you will need to press.
Okay, the earnings has now begun on the extra channel. Please do tap the like button, share, and consider subscribing. I'll be back after the call. Enjoy the call and then join us here on the main channel for Home Depot. Enjoy the call. PPI is great. Markets are pumping. Okay, so we're over there now on the extra channel with Intuitive. This is such a great day. Very, very exciting news. Let me just perhaps adjust the volume slightly. There we go. We don't want Intuitive machines too loud, but there you go. Look at this. Home Depot is going up as well. This is going to be a great day. Look at that. 102,000 now, just about 101,985. Wonderful, wonderful, wonderful. Great numbers. Let me hear from Bloomberg's reaction, how they're talking about it. Woohoo!
Sense of dollar strength, 109.36 on the euro. Mike, you've had a couple minutes. What are you looking for?
Well, the interesting thing here is there's a complete flip-flop, 180 degrees from previous PPIs, in that it was prices for final demand goods that went up 0.6 during the month, while final demand services fell 0.2%. Usually it's been the other way around. And the reason that we saw a big rise in final demand goods was gasoline prices went up. That's the major issue there, a 2.8% rise in gasoline prices. And final demand trade services, which we talked about, fell 1.3%. So that's a contraction in margins, and that is has some implications, I guess, for equities as we go forward. But it is a big change from what we saw in the prior month.
Well, this market tends to like to use PPI as a way to position into CPI. Whether that's successful or not is a different story. Is there anything you see from this that would give you any sort of indication for data to come?
Well, I haven't gone deep into it, but obviously we have to take into account the idea that gasoline prices may have gone up. The wholesale and the retail prices don't match up on a regular basis, so that may not be the case. I'll take a look and see whether we get whether we have anything in terms of
great
things
news
like
today.
Airfares or cars. That,
exactly as planned, exactly as predicted. Spot on.
You can't really take PPI as a precursor to CPI. Basically, the easy way to say that is middlemen. Because
so we'll drop out of that right now. This is great. Exactly as we said. Days like this you dream of. Okay, so there we go. Home Depot is up. Rates will be coming down. My margin will be coming down. I will not be chasing the market. I'll already be in 102,000. I am loving it, loving it, loving it. But it's no surprise whatsoever. A very, very good day today. Right, we've got Intuitive Machines happening live right now on the Extra channel. They're enjoying that. Let me share with you what's going on over there.
The year's second half with zero debt on our balance sheet and sufficient cash to fund expected operations for the next 12 months. Intuitive Machines.
And here on the main channel, we are covering Home Depot. That is in 25 minutes. So we're keeping an eye on that. Let's read all your comments. If you've not tapped the like button yet, please do, and subscribe. Would be wonderful as well. Let me read all the comments. What a great day. What an absolute great day. But it's not a surprise, really. It's not a surprise at all. Nothing surprises me so much anymore. People always overreact. People are always greedy. People always lie and manipulate. When you understand that, it all makes sense. So with Lunar earnings determined, is it a good company to invest in? Zubair, well, you need to be listening to the earnings to decide that. The housing market is a big mess. Morning, Martin. Sam, SB. Good morning to you. How are you today? Lovely to have you here. Sam became a member yesterday. Lovely to have you here. Good morning. What's Leah's favorite holiday? What's Leah's favorite holiday? The holiday she met me on a cruise ship. That was what she would say when I was the piano man. Good morning, Martin. Hope you had a lovely evening day yesterday. Yes, I did. Thank you, Charles. Good morning. I don't understand PPI, but 0.1 and it's good. You said, let's go. Yes, it means producers' prices are down. It means inflation is coming down. The Fed are going to cut rates in September. They're going to come down by 0.5%. I've said for 18 months, the rates will come down in the summer of 24. They will. They have. It's why I've invested. It's why I'm all in the margin. Don't believe all the FUD, the nonsense. Meet Kevin, end of the world. The world's going to come to an end. 60% crashes. All of the nonsense. As you can see from my portfolio, the very opposite is happening. And that's why I'm all in. That's why I'm an investor. And we're gonna get one hell of a day today. And remember, I've got $180,000 invested. So you're about to see one hell of a rally on my portfolio. I'm up $937 on that account. I'm up about $300 on my Roth. It's probably going to be in the region of $2 or $3 grand today. I could hit 107,000 today without much really to stop it. There we go. Hi all, Henrik, good morning to you. What's the best way to find when these events like PPI come out? What's the best way? Well, I report on all the live events. Here, watch the show. I tell you all the economic dates. I post them all on my X. I talk about them live on the show. I put it everywhere. Tomorrow we're going to do CPI core inflation tomorrow. So yeah, I mean, what do you want me to tell you? It's also it's on all my social media and it's on all my live shows. I just did the research. Good morning, Bill. Mama said there'd be days like this. Hi, Steve. Hi, Stephen. Please, Venezuela, great again by helping get rid of. Please, Venezuela, great again by helping get rid of dictators. Me now, how are you? I haven't got much say over that, I'm afraid. Anyway, Home Depot is 20 minutes away. This is the Home Depot earnings. Lucas Aids, it's time for a refreshing, nice cup of tea. James, let's do it. Let's do it. You ready, James? Let's turn on the spotlight. Watch the microphone light up right behind me there. See it light up? Subtle and gentle. Let's have a cup of tea. James. Cheers, James. It's been a while. Thank you very much, mate. Rock and roll all the way. Lovely stuff. Let's turn the spotlight down. Let's sink back into our position here at the front. There you go, and we're in. Home Depot. Portfolio up 1.25, $950, 102,000. Let's get an all-time high. Come on. No, like Christmas, Halloween. Oh, a favorite holiday. A favorite holiday. Oh yeah, of course. You mean vacation? I was thinking, yeah, vacation, right? Yeah. In England, holiday is holiday. That's confusing, right? You know what I mean. Probably. I don't know. I don't know the answer to that. Actually, we keep ourselves very private to ourselves. I don't think we have a favorite holiday. I suppose Christmas. Yeah, Christmas in England. Christmas in England. There you go. Christmas in England. Definitely. Positive energy. Stacy, good morning. Good afternoon, everyone. Hi there. How you doing? Nice red rose cup of tea. Nice one, Bill. 7.1% today on Nvidia with margin. Let's go. All right. I wouldn't be using margin just to buy an individual stock. But good luck to you. Remember, I keep telling you, take profit if you can. And it's a $200 stock. Yes. However, just don't get too ahead of yourself using margin on an individual stock. That's a dangerous thing to do. And I've just seen how much you've just said 7% today on Nvidia on margin, and it's only up 3.6. So you've gone all in on margin, haven't you? Right? Just remember, please remember, balance, risk management. You're riding you're obviously riding a tightrope, massive gains, massive risk. Okay. Just bear that in mind. It's not where you are today. When you sell, take some profit, you got to pay tax. Think about it. It's where you are in a year when you need the money. Sam, you look like a young man on the screen on your thumbnail. So I'm assuming you don't need the money yet. Hopefully you're not using the stock market to get rich in 5 minutes. So just warning you, don't lose the money you've made. Anyway, just giving you some balance. All right? I wouldn't be in margin on any stock, even Nvidia. Just saying. Of course, you can make greater gains than me, but you are riding the riskiest of. It's a great stock. It's not. You're not buying Binky Bonk or FFIE, but it's also it's the edge of your risk management. Let's put it that way. Mike, when do you think Robinhood UK will have margin, or is it the UK government blocking it? I don't know what's stopping it. It's a lot to do with pay to order flow. Their systems, the UK system is very different than it is in the US. Anyway, Intuitive Machines is happening. Luna is LUNR is happening over on the Extra channel. Quick listen in.
Mods were under negotiation in Q1. During the second quarter, we revised contract revenue.
There we go. That's happening now on the Extra channel. Here on the main channel, we are doing Home Depot with a massive rally this morning, which is nice. So let me cover this news sent in by Mike. I'm having a cup of tea right now. Lovely, lovely. I have a stop loss at 109 and holding. Okay. I can't wait until we get margin in the UK. Don't rush into it, folks, right? Okay. HD. So what's the time now? I'm going to do a HD video. 41 minutes. Okay, here we go. HD 41. 41. Because I got 15 minutes before the call. Okay. I've just heard that Luna Intuitive Machines is now a debt-free company. That's good to hear from such a small company. Very, very good indeed. Right. Let's do this now. Home Depot, breaking news just moments before the earnings call. It is a beat, but there's a warning. However, it comes exactly at the same moment that we get PPI, and it's a huge drop. Is it a surprise to me? No. It's why I'm fully invested and fully in margin with the S&P 500. It's not a surprise to me. I know inflation is coming down. It's come down lower than the 2%. There's no doubt about it whatsoever. It's the US is using backward lagging indicators. The UK, Europe, India, other parts of the world have known this. Like Canada, they've also dropped their rates. Other countries around the world have dropped rates. The Fed are behind the curve. However, the US economy is strong and they can get away with this but we've got a warning from Home Depot, but the markets have rallied today. No surprise at all if you are in the S&P and you are all in. Of course, this is fantastic news today because rates will come down. Interest rates will continue to come down. Inflation's coming down, but it means, in my opinion, that we've reached the bottom. We're going to get a soft landing. We are touching recession. Recession is the bottom. It's the time to get in. But now people are chasing and I'm already in, which is great. Let me share you a warning, though, from Home Depot sent in by one of our members, Mike. We want to thank Mike for this. Just come in. This is just a few seconds before the call goes live. So let me just share this with you. Home Depot issue a warning. No surprise, really. The consumer is spending less. That's what this is all about. That's what the economy, what the Fed have been trying to do. cool the market down, cool the economy down. Home Depot says consumers are feeling crummy about the economy. They are dishing out less to remodel their homes. The home improvement giant, a bellwether of consumer spending and the housing market, lowered its sales expectations for the year. It said customers were spending less on home improvement projects, pressured by higher rates and concerns that the economy is getting worse. During the quarter, high interest rates and greater macroeconomic uncertainty pressured consumer demand more broadly, resulting in a weaker spend across home improvement projects. Ted Decker, Home Depot CEO, said in a news release, I think that's quite funny when you think of Black & Decker, Ted Decker. I wonder if there's a relationship there. Someone's probably going to say, well, yeah, it's his dad or someone like that, Black & Decker, I don't know. Anyway, the old Black & Decker sander, all right? Anyway, Home Depot said Tuesday it expects sales at its stores open at least 12 months, sales at stores open at least 12 months to fall between 3 and 4% this year compared to last year. That's down from its earlier estimate that sales would fall about 1% by that measure. Consumer demand for home improvement has been slumping for about a year, and the economy said the story hasn't changed much. Still, Decker remained optimistic, saying the underlying long-term fundamentals supporting home improvement demand are strong. Absolutely, they are. This means we are at bottom now. This is fantastic. This is what an investor wants to see. A long-term investor wants to see this. So, Home Depot earnings is just moments away. It's a beat, but a warning going forward. That's what it means. That's a recession or just touching a recession. We are slowing down, but we're not going to crash. Those that have said would get a 60% drop, like Meet Kevin, will do anything to get you to watch, and all sorts of drama YouTubers. The world's coming to an end. We need to run away and stick our heads in the sand or whatever. No, the economy is fine. This is how it works. There's not going to be a 60% drop. There's never been a 60% drop. And we are in a very strong position now, at least if you are in and invested. And I am all in, as you know. I expect a 3x by the end of the decade on the S&P. We're not in an AI bubble. That's doing well. Nvidia is a $200 stock. Home Depot is strong. It'll be back. This is a great opportunity. I'm loving it. Inflation's down. PPI is down. Everything is fine. There's nothing to see here, folks. Thank you, MJ Dobbin. Click above my head for all the links down below in the description. You might want to go and check out the Home Depot earnings. I'm about to stream it live, or you can catch it later, and I'll put the main video here so you can actually watch the enhanced video after it broadcasts. I improved the audio. Up here and down here, I'll put something else that might be of interest. Can't think what it is right now, but something amazing just down here. Until next time, as always, take care of yourselves and each other. Okay, Home Depot, just a few moments away. Right, over on the Extra channel, we are running Luna, who are now completely debt-free. Intuitive Machines.
Steps to watch for in that important endeavor.
There's the event.
Yeah, let's see. As you know, we've built the ground network on our first mission.
That's happening there. And here on the main channel, we are, of course, covering Home Depot. Excellent stuff. What a day it is indeed. Bam, 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 bam. Now, remember, I just want to keep putting warnings out to my dear friend Sam, who's all in on margin with NVIDIA. I would never be in margin with any individual stock. However, it's a $200 stock, but that's not a guaranteed fact. That's what I believe. Looking at the numbers, there can be fluctuation between now and then. Just bear that in mind. I also want to tell you that NVIDIA is not really concerned about interest rates. It doesn't benefit them. In fact, it probably goes against them slightly but then they knew rates were coming down. If rates are high, It enables them to further crush the competition because they have cash and they can live through the bad weather. They have greater margins, so they can crush competition. Others can't reduce prices because of inflation and interest rates and costs. So it helps them. Also, they earn a lot of money on their uninvested cash. Nvidia don't care if rates go up. When rates go down, it doesn't really benefit them at all. They earn less on their uninvested cash. They don't need to borrow any more money. They're likely to start paying down their debts now because they're not earning so much on uninvested cash. So it doesn't really help them that much. All right, so just bear that in mind. So markets are up. My balance now is 101,925. We're 9 minutes to go before Home Depot starts. If you've just tuned in, consider subscribing, and if you could tap the like button, share this out. How many likes have we got on the show right now? We've got 75 watching, and we've got 26 likes. We can do better than that. We can do better than that. We've got to do better than that. Come on, here we go. The most we could get, because 50% are not signed in, let's go 35. So 26. Let's get 30. And this is the Home Depot earnings. We're ready for it. We're ready for it. It'll go live here in just a moment. You can see they've beaten on earnings, but there's just a slight warning. And it is a slight warning because it'll all come back. It's an opportunity to buy it. Oh, hang on a minute. Let me refresh this.
Purchases. Exclusions apply for licenses.
There we go. Home Depot. There is the call. Just wanted to update that. Okay, let's come back to here. 26 likes in 5, 4, 3, 2, 1. We want 35. Let's get 35 and boom, 32. We need 3 more likes. Tap the like button. You ready? In 5, 4, 3, 2, 1. Let's go. I want 35. That's doable. 33. Oh, bloody hell. 2 more. Okay, in 5, 4, 3, 2, 1. Come on, come on. Let's rock and roll. 33. Okay, we're stuck at 33. I see. Never mind. Never mind. Thank you very much. Anyway, Home Depot isn't a massive show. Not a lot of people interested in that. But that's okay. We'll still cover it because it's important to understand where the economy's going. It's not sexy in rock and roll. And people go, not interested in Home Depot. Well, then you shouldn't be investing. You need to know these things. This is the bread and butter. This is the basics of the economy. These are important disciplines to learn and cover earnings. This kind of stuff is important. I see it rising. Congratulations, Martin. Thank you very much indeed. Nvidia today. Yes. Yes, it's looking very good now. 113 touching. If I was a leader of the UK, I would make a tea free for everyone. And you could bankrupt then, wouldn't you? Morning all. Good morning, John Granford. Good morning, Martyn Lucas Aids. Please, any comment or forecast on nuclear energy going forward in the USA? Sorry, not right now. I can't. I'm in the middle of an earnings, William. I'm sorry, I can't do that right now. Ask me again when we're not in the middle of an earnings. We're 5 minutes before the earnings starts. Hi, Henrik. Thank you for your advice. I'll reduce my margin once the stop loss hits. I also want to say, and I'll just give you just a cautionary tale, I don't ever use stop losses. As I've explained before, if you know what you're investing in, I think stop losses can be more dangerous than helpful. Let me explain. Remember, every time you trade, whether you sell, whether you buy, one person always makes money, the brokerage. Even if you're using Robinhood and it's free trading, there's micro profits for the market makers. They wholesale trade. They take all your trades and everybody else's millions and hundreds of millions of trades at one time and buy that position and sell or buy that position. They make money. There is money to be made when you trade. If there's money to be made for the person selling you a service, then always consider this. If they're making money from you, right, you're losing, in my opinion. When you're in control, you're winning, okay? So just bear that in mind. Just because you can trade doesn't mean you should trade. And if you set stop losses, you'll be forced to trade. Because if suddenly we got a flash dump, like a profit taking, and it hit your stop loss, boom, you're out. And then it might bounce right back. Now, of course, a stop loss can save you from losing money. I get it. But what... Did earnings just finish? Over on Extra, did earnings just finish? Oh, okay. There was a big pause there on the Extra channel. Anyway, so what was I going to say? What I would be doing, if you are really keen on making money and getting out and clearing your margin, this is what I would do. I wouldn't have a stop loss at all. I would use a trailing stop loss. That's what I would use, and you can't use that until the bell goes in half an hour. It has to be during the main session. I would use a trailing stop loss. If you are keen to make quick profit, get out, no stress, no fears, whatever, I would use a stop trail loss. Stop trail order. And let me explain how that works. You have set, and you just told me, you have set a limit stop loss at 109. So if the stock drops at 109, you're out. Well, why would you want to be out at 109 when we're currently 113? You would have left money on the table. When you think it's going to 200, you've ended up selling 109. Remember, you got out at 108, back in at 109. You've already lost money because you keep getting in and out. And now you've got a stop loss at 109. So you've ended up selling. If it drops, if we get a flash little profit taking on the bell, you're back to where you keep losing money all the time. However, if you set a stop trail order, and let's say you put a 1% drop or a 2% drop, your price will keep going up with the market. So if you buy, let's say you want to sell it to 10, and you're allowed, you've got a 1% drop. Let's say it will go to 9, right? If it goes to 11, it now moves to 10. It's always 1% behind. If it goes to 12, it goes to 11. If it goes to 13, it goes to 12. It follows it up all the time and then sells if we get a drop. That's a good strategy if you want to get out of a stock today, because it only works during the main hours. You can cancel it, of course, later on if you want to. That way you continually make money and get the most out of it. But remember, if you set a stop trail order, you need a little bit of movement, because even though you can't see it, the stock is moving millions of times a second. You just can't see it because you're looking at a basic line chart on Robinhood, but it's moving millions of times a second. So you need to have, if you want to stay in as long as possible and hope it's going to go up higher, you want to make sure that you've got a decent amount, either a dollar amount or a percentage amount. Look at the swings that you're getting and say, look, it's swinging around about 2%. Okay, so I'll set 2.2%. It's swinging around by about $1, so I'll set $1.50. So you've got that movement. That's what I would do if you want to get out of the stock. Make sense? All right, but you do it your way. Okay. Otherwise, you'll just keep losing all the time the way you're doing it. Anyway, be very careful. Right, Home Depot earnings.
Carpet at the Home Depot.
Right, here we go. We're listening in. Any moment now. Let's go over to it. Here we go. Home Depot.
Project.
They're playing audio. The moment it begins, I shall unmute the channel. Normally 1 or 2 minutes late. They all are for some bizarre reason. They're running commercials. I've never heard anything like it. Come into the store and buy a hammer. Here we go.
Home Depot second quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. A brief question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce your host, Isabel Janci. Please go ahead.
Thank you, Christine, and good morning, everyone. Welcome to Home Depot's second quarter 2024 earnings call. Joining us on our call today are Ted Chair, President, and CEO, Anne Marie Campbell, Senior Executive Vice President, Billy Bastek, Executive Vice President of Merchandising, and Richard McVale, Executive Vice President and Chief Financial Officer. If we are unable to get your question during the call, please call our Investor Relations Department at 770-384-2387. Before I turn the call over to Ted, let me remind you that today's press release and the presentations made by our executives include forward-looking statements as defined in the Private Securities Litigation Reform Act of 1995. These statements are subject to risks and uncertainties that could cause actual results to differ materially from our expectations and projections. These risks and uncertainties include, but are not limited to, factors identified in the release and in our filings with the Securities and Exchange Commission. Today's presentation will also include certain non-GAAP measures, including but not limited to adjusted income, adjusted operating margin, and adjusted diluted earnings per share. For a reconciliation of these and other non-GAAP measures to our corresponding GAAP measures, please refer to our earnings press release and our website. Now, let me turn the call over to Ted.
Thank you, Isabel, and good morning, everyone. Sales for the second quarter were $43.2 billion, an increase of 0.6% from the same period last year. Our sales in the quarter include $1.3 billion from SRS. Recall that we closed on the SRS acquisition on June 18th, and we've included approximately 6 weeks of their performance in our consolidated results. Comp sales declined 3.3% from the same period last year, and our U.S. stores had negative comps of 3.6%. Adjusted diluted earnings per share were $4.67 in the second quarter, compared to $4.68 in the second quarter of last year. The team continues to navigate this unique environment while executing at a high level. During the quarter, higher interest rates and greater macroeconomic uncertainty pressured consumer demand more broadly, resulting in weaker spend across home improvement projects. Additionally, we saw continued softness in spring projects, which were also impacted by the extreme weather changes throughout the quarter. When we look at the performance in the first 6 months of the year, as well as continued uncertainty around underlying consumer demand, we believe a more cautious sales outlook is warranted for the year. Richard will take you through the details in a moment, but we are now guiding to a comp sales decline of approximately 3 to 4% for fiscal 2024. Regardless of the current pressure in the environment, our team remains focused on serving our customers and ensuring we have the right products at the right values. And we remain focused on long-term share growth in the highly fragmented, approximately $1 trillion home improvement market. Remember, we operate in one of the largest asset classes, which is estimated at approximately $45 trillion, representing the installed base of homes in the United States. Today, we have roughly 17% market share with tremendous growth potential. That is why we have been investing and executing on our strategy to create the best interconnected experience for our Pro Wallet share through a differentiated set of capabilities and build new stores. Now I'll take a few moments to comment on our acquisition of SRS Distribution. SRS has an exceptional team with a proven growth track record, and we are thrilled to welcome them into the Home Depot family. While our financials only reflect a portion of their first half performance, for the first 6-month period matching our first half, they generated high single-digit top-line growth while growing operating income largely in line with sales compared to the previous year. We are incredibly excited about what we can achieve together by leveraging our combined assets, capabilities, and competitive advantages. We plan to drive incremental growth through several sales and cross-synergy opportunities. We will make their more comprehensive product offering in roofing, pool, and landscape available to all our customers through our Pro Desk. And we will offer SRS customers a form of credit tied to their account, which will make purchases at Home Depot stores much more convenient. The fundamentals of the home improvement market remain strong, and we have significant growth opportunities in front of us. We are gaining share of wallet with our customers, whether they are shopping in our stores, on our digital assets, or through our Pro ecosystem. Our merchants, store and met teams, supplier partners, and supply chain teams are always ready to serve in any environment. They did an outstanding job delivering value and service to our customers throughout the quarter, and I'd like to close by thanking them for their dedication and hard work. With that, let me turn the call over to Ann.
Thanks, Ted, and good morning, everyone. As you heard from Ted, despite the environment, our associates continue to be engaged and ready to serve our customers. We know that delivering the best shopping experience for any purchase occasion is critical to our success. That is why we continue to invest in our associates, our in-store capabilities, our fulfillment channels, and the customer experience. Over the past year, we have talked about the tools that help us create this differentiated experience, specifically our focus on in-stock and on-shelf availability, or OSA, with our Sidekick and computer vision applications. Today, our in-stock and OSA are at best-in-class levels and provides a foundation for a fast in and out convenient experience that many of our customers desire, especially our Pro customers. We have also enhanced the tools our associates use for our in-store pros and specialty selling. Within the MyView tool, which has many in-store applications, we have given our associates better visibility to our customers' activity with the Home Depot. For example, for our in-store pros, we can see sales trends, specific buying patterns, and expiring perks, equipping our associates with insights to better partner, grow share of wallet, and deliver value for our customers. To drive conversion for specialty customers, we launched a new platform known as Pipeline Management that enables interconnected project selling for kitchen designs. With this tool, associates and store leaders will now be able to have a consolidated digital view of their pipeline and all activities related to a customer's journey. This allows associates to more easily manage multiple complex projects while more effectively communicating with our customers throughout their journey. Additionally, we continue to make progress on our organic efforts around our different assets and capabilities to grow share of wallet with a complex project purchase occasion. We are pleased to announce that we now have key Pro capabilities in 17 markets, including a broader product assortment, digital assets, a sales force, and broader fulfillment options. Our trade credit pilot program is also underway, and while it's still early days, we have seen the program resonate with our customers and the benefits of extending credit for larger scale projects that are staged over a longer period of time. We are also making progress on our order management system as we continue to roll out enhancements to the end-to-end selling system. We are very excited about our continued success serving the complex project purchase occasion and are focused on delivering the best customer service to all our customers. Our store readiness and execution is strong and our associates are engaged. I look forward to the many opportunities ahead of us, and I want to thank all our associates for all they do to take care.
Thank you ever so much, everyone, for joining me. Now join us here on the main channel for the Home Depot earnings. Thank you very much indeed.
Associates and supplier partners for their ongoing commitment to serving our customers and communities. As you heard from Ted, during the second quarter, the higher interest rate environment and greater macroeconomic uncertainty pressured overall project demand. In addition, our sales reflect a softer spring selling season, which was also impacted by extreme changes in the weather throughout the quarter. Turning to our merchandising department comp performance for the second quarter, our plumbing department posted a positive comp, while power, building materials, appliances, and paint were all above the company average. During the second quarter, our comp transactions decreased 2.2% and comp average ticket decreased 1.3%. However, during the quarter, we continued to see our customers trading up for new and innovative products. Big ticket comp transactions, for those over $1,000, were down 5.8% compared to the second quarter of last year. We continued to see softer engagement in larger discretionary projects where customers typically use financing to fund the project, such as kitchen and bath remodels. Pros outperformed the DIY customer, but both were negative for the quarter. We saw positive growth with pros who engage in our Pro Extra program, deliveries to the job site, and our B2B website. Turning to total company online sales, sales leveraging our digital platforms increased approximately 4% compared to the second quarter of last year. And for those customers that chose to transact with us online during the second quarter, nearly half of our online orders were fulfilled through our stores. In addition, during the second quarter, we expanded our partnership with Instacart to improve the interconnected shopping experience nationwide. While we are still in the early days of our expanded partnership, we are encouraged with the results we are seeing. During the second quarter, we leaned into products and projects that are resonating with our customers. We updated some line structures focused on innovation and continued to deliver a compelling value proposition while focusing on the customer experience. For example, we upgraded the durability of all life-proof vinyl plank while also introducing on-trend colors, patterns, and lengths. This helped drive positive comps in the category for the quarter. We updated some line structures. In water heaters, we recently modified our line structure to better serve the pro customer needs. We simplified our value proposition, adding new and better features, which drove increased engagement in the category. And in paint, we continue to see the benefits of the investments we are making around our products and our fulfillment options, including our in-store service and job site delivery capabilities with the Pro Who Paints, driving continued share gains in the quarter. And finally, we continue to see tremendous success in our outdoor power equipment categories, driving both positive unit and dollar comps in the quarter. As we've mentioned before, we have built a strong competitive advantage with our extensive lineup of battery-powered platforms that allows us to continue to grow share in these categories. As we look ahead to the third quarter, our merchandising organization remains focused on being our customers' advocate for value. This means continuing to provide a broad assortment of best-in-class products that are in stock and available for our customers when they need it. We will also continue to lean into products that simplify the project, saving our customers time and money. That's why I'm so excited about the innovation we continue to bring to the market. This quarter, we are launching the first-to-market smart glass door with Feather River. Feather River is a leader in the fiberglass door market and continues to bring innovation to our customers. This new door technology allows customers to easily change the glass from privacy or frosted to clear with a push of a button and is compatible with our HubSpace ecosystem. This will be exclusive to the Home Depot and the big box retail channel. Additionally, we continue to lean in with our exclusive partner Milwaukee across the business and have seen great adoption of electrical hand tools. Our partnership is expanding with a broader assortment of made-in-the-USA tools. These tools provide a high degree of precision with lasting results for our pro customers and will continue to strengthen our position as the #1 destination for the electrical trade in the big box retail channel. With that, I'd like to turn the call over to Richard.
Thank you, Billy, and good morning, everyone. In the second quarter, total sales were $43.2 billion, an increase of approximately 0.6% from last year. Total sales include $1.3 billion from the recent acquisition of SRS, which represents approximately 6 weeks of sales in the quarter. During the second quarter, our total company comps were negative 3.3%, with comps of negative 3.7% in May, negative 0.9% in June, and negative 4.9% in July. Comps in the U.S. were negative 3.6% for the quarter, with comps of negative 4.1% in May, negative 1.4% in June, and negative 5% in July. In the second quarter, our gross margin was approximately 33.4%, an increase of 40 basis points from the second quarter last year, primarily driven by benefits from lower transportation cost and shrink, partially offset by mix as a result of the SRS acquisition. During the second quarter, operating expense as a percent of sales increased approximately 65 basis points to 18.3% compared to the second quarter of 2023. Our operating expense performance was in line with our expectations. Beginning this quarter, in addition to our GAAP measures, we are providing the following non-GAAP measures: adjusted operating income, adjusted operating margin, and adjusted diluted earnings per share, which excludes non-cash amortization of acquired intangible assets. We believe these supplemental measures will help investors better understand and analyze our performance. Our operating margin for the second quarter was 15.1% compared to 15.4% in the second quarter of 2023. In the quarter, pre-tax intangible asset amortization was $90 million, including $39 million related to SRS. Excluding the intangible asset amortization in the quarter, our adjusted operating margin for the second quarter was 15.3% compared to 15.5% in the second quarter of 2023. Interest and other expense for the second quarter increased by $61 million to $489 million due primarily to higher debt balances than a year ago. In the second quarter, our effective tax rate was 24.5% compared to 24.4% in the second quarter of fiscal 2023. Our diluted earnings per share for the second quarter were $4.60, a decrease of approximately 1% compared to the second quarter of 2023. Excluding intangible asset amortization, our adjusted diluted earnings per share for the second quarter were $4.67, essentially flat compared to the second quarter of 2023. During the second quarter, we opened 3 new stores, bringing our total store count to 2,340. Retail selling square footage was approximately 243 million square feet. At the end of the quarter, merchandise inventories were $23.1 billion, down approximately $200 million compared to the second quarter of 2023, and inventory turns were 4.9 times, up from 4.4 times last year. Turning to capital allocation. During the second quarter, we invested approximately $720 million back into our business in the form of capital expenditures. And during the quarter, we paid approximately $2.2 billion in dividends to our shareholders. Our disciplined approach to capital allocation remains unchanged. First and foremost, we will invest in the business and expect capital expenditures of approximately 2% of sales on an annual basis. After investing in the business, we plan to pay the dividend, and it is our intent to return any excess cash to shareholders in the form of share repurchases. Computed on the average of beginning and ending long-term debt and equity for the trailing 12 months, return on invested capital is approximately 31.9%, down from 41.5% in the second quarter of fiscal 2023. Now I will comment on our updated outlook for fiscal 2024. As you heard from Ted, given the softer than expected performance in the first half of the year and reflecting continued uncertainty around underlying consumer demand, we believe a more cautious outlook for the year is warranted. With the recent closing of the SRS acquisition, we are now including their results in our consolidated outlook for the year. For the period matching our first half, which includes periods prior to the acquisition and not fully reflected in our financial statements, SRS generated high single-digit percentage sales growth, with operating income growing largely in line with sales. We believe that over the next several years, SRS on its own and through our combined pro efforts will help accelerate sales and earnings growth for our company. Updating our fiscal 2024 guidance for the factors we just discussed, we now expect total sales growth between 2.5% and 3.5%, including the SRS acquisition and the 53rd week. The 53rd week is projected to add approximately $2.3 billion to total sales. SRS is expected to contribute approximately $6.4 billion in incremental sales. Comparable sales are expected to decline between -3% and -4% for the 52-week period. The high end of our range implies a consumer demand environment consistent with the first half of fiscal 2024. While comparable sales for the company are not currently on the trajectory for the low end of the range, a -4 comp implies incremental pressure on consumer demand beyond what we are seeing today. We expect to open approximately 12 new stores. Our gross margin is expected to be approximately 33.5%. We expect operating margin to be between 13.5% and 13.6%, and adjusted operating margin to be between 13.8% and 13.9%. Our effective tax rate is targeted at approximately 24%. We expect net interest expense of approximately $2.2 billion. Our diluted earnings per share percent will decline between -2% and -4% compared to fiscal 2023, with the extra week contributing approximately 30 cents. We expect our adjusted diluted earnings per share percent to decline between -1% and -3% compared to fiscal 2023, with the extra week contributing approximately 30 cents. We believe that we have positioned ourselves to meet the needs of our customers in any environment. The investments we've made in our business have enabled agility in our operating model. As we look forward, we will continue to invest to strengthen our position with our customers, leverage our scale and low-cost position to drive growth faster than the market and deliver shareholder value. Thank you for your participation in today's call, and Christine, we are now ready for questions.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Thank you. Our first question comes from the line of Scott Ciccarelli with Truist. Please proceed with your question.
Good morning, everyone. So it sounds like you guys are seeing a bit more of a shift towards, let's call it, broader consumer weakness from what previously seemed to be hesitancy around finance projects. Can you provide a couple of examples just so we can better understand, kind of the incremental hesitancy on consumer spending patterns?
Well, I think it's just in broader projects, Scott. As we said in the prior few quarters, the consumer remains engaged. Our consumer in particular remains quite healthy. Again, these are consumers who have seen their home values go up 50% in the last 4 years. Their home equity has increased almost 70% since right before the pandemic. So that translates to over $13 trillion. Equity values have been strong, jobs are strong, earnings are strong. But we saw engagement the last several quarters in smaller projects. What we saw this most recent quarter is further pressure in larger projects. And we see that in building materials, in lumber, categories that are very specifically tied to construction in a larger project. And that was really the change that we saw as the quarter progressed.
So in other words, like it's not necessarily broadening out, but it's increased pressure on, let's call it, project-oriented purchases.
Yes, and you said it. I mean, the change that we believe happened over the course of the quarter is if you go back a bit to the environment that we've been working through, this period of moderation, the first thing we saw was a shift in spending, PCE spending, from goods back into services. And we're effectively through that transition. The relative share of spend is more or less equal to where it was before the pandemic. And then we had certainly some pull forward in our segment. I'd say we're not completely through the pull forward, but largely. I mean, we're now going on 4 years from the first spring of the pandemic when people were buying, lots
2
of
minutes to
grills
go before the market opens. Tap the like,
etc. We're
and
consider
consider subscribing to the channel.
And then the higher interest rates started to impact.
Inflation, PPI came down today. It was a great day. Let's see how the market opens.
Which is down, some 40%. And I think last month, we saw numbers that on an annualized basis were approaching 40-year lows. That's also impacting customers' interest in financing larger projects. Everyone's expecting rates are going to fall, so we're deferring those projects. But again, what more recently has happened is a broader concern with the macro economy. There's just a lot of noise with political and geopolitical environment. Unemployment ticked up. Inflation keeps eating away at disposable income. And I think people just took
just under a minute to go
as we progress through the quarter, or more of a pause because of these macro uncertainties.
Got it. Very helpful. Thanks, guys.
Thank you.
Our next question comes from the line of Seth Sigman with Barclays. Please proceed with your question.
Hey, good morning, everyone. I wanted to ask about just performance across different channels. So core Home Depot retail, I think that's pretty clear, but Home Depot or HD Supply, it seems like it's outperformed, but kind of hard to tell from our side. And then on SRS, if you can maybe just elaborate more on the trends you're seeing there. As you step back and think about, hopefully an eventual recovery, you've built up this very diverse business over the last few years. I mean, how do you think about the timing of these different segments and how they come out of this?
Bell's gone.
Sure. So, well, I tell you, we're very proud of all components of our business. We are executing at an exceptionally high level across the core and across the businesses that you call out. While we don't split out HD Supply as part of our core, we are proud to say that we have had, and HD Supply has had an exceptional track record as of late, even penetrating through to generate positive sales growth in the second quarter. And so that's a real bright spot for the Home Depot. SRS, as we told you when we acquired SRS, this is a growth company acquiring a growth company. SRS has a track record of growing faster than their competition in all of their verticals and has done so for the last 15 years. If you look at what SRS accomplished in the first 6 months of the year, again, we only own them for 6 weeks, so we only book 6 weeks of results. But they grew in the high single-digit percentages in the first half. They had healthy growth in the second quarter, and we expect them to again book single-digit growth in the entirety of the year 2024, even though we'll only own them for 7 months. So, these two business models, HD Supply and SRS, are great examples of market leaders who are accustomed to growing share and delivering the bottom line as well.
Yeah, and I'd add to that, Seth. We're not going to break out operating segments, but in HD Supply's case, there's some appropriate comparatives. In SRS, there's very much publicly traded comparatives, and we feel really good about the MRO business, the roofing, the pool, and the landscape business against those comparables.
Okay, that's super helpful. And then if we just zoom back in on core Home Depot, maybe just speak about your relative performance, if there are categories that you may be seeing some widening gap. You called out a number of categories that seem to be under a lot of cyclical pressure, but were cited as bright spots. Outdoor power equipment. You mentioned appliances above average. Obviously, that's been a tough category. I think you even mentioned vinyl plank having positive comps. So maybe just speak to some of those categories and where you may be seeing that widening gap. Thanks.
No, thanks, Seth. So it's Billy. Listen, as I did mention in our prepared remarks, and we continue to talk about, the finance projects, we continue to see ongoing pressure. I don't think that's new news. Having said that, we called out a number of businesses that you just mentioned it. Vinyl plank, we saw great performance in both sales and unit comps. Water heaters, as I mentioned. Certainly paint. We're thrilled with the efforts we've had in paint with the pro that paints and our paint business in total. And again, power across our platforms as well. So, non-finance projects, while, we did see some softness in some of the seasonal pieces that we alluded to in our prepared remarks, the continued ongoing pressure of just the uncertainty, as it relates to interest rates is going to continue to put some pressure on those finance projects. But we're pleased with some of the other pieces I mentioned, larger ticket, one-time purchase categories like riders as an example. We continue to see, good engagement, in businesses like that as well.
Thanks, guys.
Our next question comes from the line of Michael Lasser with UBS. Please proceed with your question.
Good morning. Thank you so much for taking my question. What do you think the key level for the 30-year fixed rate mortgage needs to fall to in order to drive Home Depot's business higher? And does that rate change or that level change if the decrease in rates is due to an erosion in the labor market rather than just a moderation in inflation?
Hey, Michael. Good morning. Full question there. Hard to pinpoint what that magical rate number is, historically, and then, as you say, with some added pressure. All I can do is reference toward the end of last year when rates, came off, the highs over 7 and moderated down, I think even hit below 6.5 there for a bit. You saw an immediate increase in housing activity, mortgage applications, mortgage refi applications. And then, unfortunately, the rates spiked back up, I think almost to 7% again. So we're trending down again. I think you're approaching 6.5% for qualified mortgage. And based on what we saw toward the end of last year, we would think you're approaching a level that people are going to engage. Caveat to that would be, again, this broader, economic, geopolitical even concerns that people still might pause a little bit until some of this gets sorted out, which would be understandable. But as rates head down, towards 6, we would expect to see activity. The other thought or piece of this whole puzzle is the amount of folks, as you know, who are in mortgages as low as 3%, plenty of mortgages under 5%. There's definitely a little bit of a golden handcuff dynamic going on with those rates. But again, as time goes on, family dynamic changes. And for 1 or 2 years, you might, stay in those golden handcuffs and enjoy the low rate. But family size increases, household formation, moves for employment, retirement, et cetera. So we would see a gradual unlocking of that, even if that adds to a little bit of a delay response to housing from a traditional, rate cut environment.
Okay, thank you very much. My follow-up question is, the longer that this downturn persists, does Home Depot have an inclination to invest more in price or value as a way to grab market share that it could sustain on an eventual upturn? And maybe as a part of this, could you pull apart your updated gross margin guidance to reflect the underlying dynamics within core Home Depot versus the influence of SRS on this line item? Thank you so much.
Yeah, Michael, thanks. I'll take the first part of that, and then I'll hand it to Richard on the second piece of that question. As it relates to just the promotional activity, I mean, listen, we're going to continue to drive innovation and create value for our consumers. We are in a very rational environment as it relates to the home improvement sector. While there's been some pressure in a category like appliances, we don't see the need nor are in the environment where we need to be more promotional. We're focused on driving innovation and value, creating opportunities for our customers to come into our stores every day. We don't want to be in the promotional business, and we feel very good about our position in creating these opportunities and excitement in our stores around just those things. And we've seen great adoption. We've been able to bring value into the marketplace. Areas like our proprietary brands continue to perform very well, and we're very pleased with that and don't see a change in really the promotional cadence going forward. Now, I'll toss it to Richard more on the gross margin piece.
Yeah, great. So let me actually broaden the question, because I think it's important to give the broader context. If you're asking about gross margin, let's just talk about SRS for a moment. So in last June's investor conference, we laid out a base case, and we said that there could be contributors to that base case that would push us to grow sales and earnings faster than that base case, right? So base case was 3 to 4% top line and mid to high single digit EPS growth. The acquisition of SRS is one of those accelerants that we pointed to in our investor conference, pushing us towards the accelerated case. The objective of SRS is to grow our share with the pro, to accelerate sales growth, to accelerate operating profit growth, and to accelerate EPS growth. So from a sales and operating profit perspective, as you can see, it's already contributing to our company immediately. From an EPS perspective, the acquisition of SRS will be cash EPS accretive in the first 12 months of ownership, as we said in March. It will be cash EPS accretive in the first 12 months of ownership, adjusting for the associated non-cash intangible amortization. So let's talk about how SRS is reflected in our in our financials. And again, just as a reminder, we include 6 weeks of results in Q2 from SRS, and we will include about 7 months of SRS in our full year. So just thinking about SRS, look, they have a different product mix than Home Depot, right? About 2/3 of their product is roofing, and then the remaining third is in pool and landscape. SRS carries similar margins on similar products as the Home Depot. Those products carry a lower gross margin rate than the Home Depot's company average, but their margin simply reflects a different mix than the Home Depot. And so when we think about gross margin, SRS impacted the second quarter gross margin by about 35 basis points. And if you think about what that means for kind of an annualized figure, you're talking a kind of a reset of our margin profile of about 45 basis points in gross margin. So again, that'll be about 35 basis points for 2024. And then if you look at sort of an annualized figure, it's somewhere around 45 basis points. That's kind of a reset to reflect what is in effect a new mix of product at the Home Depot. So now let's talk about operating margin and SRS's impact, because it's important to look at gross margin in that context. So when you add SRS to our mix, it adjusts our base operating margin profile, lowering it by about 30 basis points in Q2, and it lowers our base operating margin profile by just about 40 basis points for the full year of 2024. So that's 40 for the full year of 2024. Again, if you annualize that number, then the adjustment to our base margin from SRS is about 60 basis points for an annual period. And those are GAAP numbers, and we can get into adjusted numbers if you'd like. When we think about gross margin, again, for the quarter, we want to point out several exceptional performances across our operators. First of all, significant transportation benefit brought to us by our supply chain partners and our merchant partners, and significant benefit from a decrease in shrink year over year. We have now put several quarters of shrink benefit versus last year together in a row, and we can point directly at what drives that performance. It's a fantastic team that we continue to invest in, and the returns on those investments are exceptional. That's a long way of saying, if you look at our gross margin performance year over year, and you back out the SRS mix shift of 35 basis points, we were actually 75 basis points versus last year. An exceptional performance in gross margin across the board by our entire team.
Thank you very much and good luck.
Thank you.
Our next question comes from the line of Simeon Gutman with Morgan Stanley. Please proceed with your question.
Good morning, everyone. I have a question related to reversion. One way to look at it since 2019, if we look at transactions, they look like they're flat to down a little bit. So to Ted's point earlier, most of that looks like it's given back on transactions. Ticket, though, is still up about 30-ish%, 34. So, and I think that's a function of the number of items consumers were putting in the basket and because there was inflation. My question is, if we look at just the inflation piece, are there any signs of product prices, either deflating, disinflating, the non-commodity stuff, non-lumber, any signs of pricing changing in the channel? Thank you.
No, Simeon, thanks for the question. Your math is sort of spot on there. The good news is no, we're not seeing any broad step down in cost or retails. If you look at what we've laid out for AUR this year, we said that we'd have pressure of about 150 basis points of AUR in the first half. That would moderate to 50 basis points in the second half. That is all a function of lapping the cost and associated retail moves from last year. There really isn't a lot of net new activity on the cost or the retail front. In fact, sort of cost out and cost in activity, we have a very robust team that works with our merchants on this. It's all pretty neutral right now, or not a ton of activity. So as Billy said, we're not going to be promotional. We're an EDLP retailer that has to give value to particularly our pros every day. The cost environment is neutral. The price environment is neutral. We're not seeing a lot of trade down in particular. We're not seeing an increase in OPP penetration. Things are pretty neutral to several last periods of activity. And what we're seeing on the AUR is a matter of lapping. So we're not seeing that, and we would expect the cost levels from where we are today to largely hold, as well as the retail levels. Remember, there's, in the cost levels from our supplier base, it's not just a matter of, input costs in terms of materials, which you understand with our cost finance team, we have a very, very good view into that. But everyone over the last 4 years has seen significant increase in labor costs, and we're still working through transportation costs. So that 30, you can say, wow, that's highly inflationary and that has to come back. Well, in fact, the cost structure, with labor being a big component, has increased similarly, and that's why we don't see the marketplace irrationally eroding those price levels.
Okay. Follow up, trying to think about what the core business is doing in terms of decremental margins in the second half. I think some of Richard's comments before gave us some more clues, but it looks like the EBIT dollar guidance of the whole business dollars are roughly the same. We have a midpoint now. We had a one single point before. So whatever we're losing from the core, it seems like we're picking back up in SRS. And it looks like the decrementals are somewhere around 20 to 25%. Is that right? Is that the right run rate if this sort of negative comp or low negative comp environment persists?
So what I would do is why don't we talk about performance to date and how our guidance reflects the performance to date, because we actually have, as I said, outperformed certain expectations in cost of goods sold, and the team has managed expenses in an exceptional manner. And so let me walk through what that means for the guide. So you can recall we began the year with a guide of a -1 comp with a 14.1% operating margin. In isolation, if we were to take, as we take comp from a -1 to a -3, that is, call it 25 to 30 basis points of natural deleverage that we would see in that reduction in top line expectation. However, we've had favorability year to date. We know where it comes from, and that favorability enhances our earnings. And so instead of taking our 14.1% operating margin, and by the way, I'm excluding SRS in this discussion, so for simplification, if we were to set SRS to the side for a moment, naturally our 14.1 operating margin would drop to something like a 13.9 to a 13.8 at a -3. Instead, at a -3, again with SRS to the side, we are now guiding operating margin of 14%. So we have held, in essence, that core 14% operating margin at a -3 comp. That's because we are flowing through benefits that we have created through investments that we've made. Now, if we include SRS in this, obviously, as I said, there's about a 40 basis point mix shift in our operating margin base. So that 14 becomes the 13.6 that we've guided alongside the -3 top end of the range today.
I got it. Makes sense. Thank you.
And just to tie it all up together, that 13.6 corresponds with our adjusted operating margin of 13.9%. So for the year, when we eliminate non-cash amortization expense on intangible assets, we expect to report operating margin of 13.9% on a comp of -3.
Thank you.
Our next question comes from the line of Chuck Grom with Gordon Haskett. Please proceed with your question.
Thanks. Good morning. You guys talked about SRS revenue growth in the high single-digit range year to date, which is really strong in this environment. I'm curious, what's driving that success? Were there some acquisitions made by SRS? Has it been all organic? And I guess how do we think about that growth rate as we move into 25?
Thanks, Chuck. Yes, they remain a robust share-taking grower, and that high single digit is split between, roughly equally split between organic growth and lapping of acquisitions.
Okay, great. And any thoughts on how the pace of that will go into 25?
Yeah, we wouldn't give any guidance into 25, but remember, their mode of growth, which they have demonstrated this since inception in the mid-2000s, is they're a balanced grower between comping their existing branches, their open base of branches, opening greenfield branches, and then some roll-up M&A, geographical customer list add-ons. So that's the profile that they've grown for years, and that is exactly the profile that we will support going forward.
And just for clarity's sake, SRS is not in our comp base, and so they are not reflected in our comp sales guidance. They will become comp once we've owned them for 12 months.
Okay, that's helpful. And then Richard, you've talked about the consumer deferring projects over the past few quarters, but as the prospects for lower rates begin to materialize, we can start to see the line of sight for maybe a 6% mortgage rate. Is it possible that the pace of deferrals begins to ramp higher over the next couple of quarters? And if that's the case, what parts of your business do you think could be most exposed?
Well, intuitively, it's probably the converse of what we've seen. You think about the categories, and Billy, please chime in, but those things that are components of a large project, kitchen, bath, flooring, lighting, are all under pressure, and our customers tell us it's because that large project is being deferred. We're certainly not going to try to call timing, but just to echo what Ted said, there is certainly a direct relationship between decreases in mortgage rates and the amount of activity that you at least see picking up in turnover. And so I think the important point here is, as we've said for years, the long-term fundamentals of home improvement demand are strong. We have continued to invest through this period of moderation. 2024 marks the highest amount of CapEx that we've invested back in the business really in the last 15 years because we are bullish on the future. And timing is uncertain, but we're going to be ready for it.
Great. Thank you.
Our next question comes from the line of Brian Nagel with Oppenheimer. Please proceed with your question.
Hi, good morning. Thanks for taking my questions. So my first question, just with respect to the pace of comps. So there was the numbers you gave in your prepared comments. There was a marked slowdown from June to July. Is there anything that notable there, or was it just that growing malaise we talked about?
Yeah, Brian, thanks for the question. And, to reiterate, in our comps were -3.7, -0.9, and then a -4.9. While we did see some softness in July, as we alluded to in Ted's comments, there's no question that the extreme heat took some sales in weather-related categories. Think ACs and fans, think air circulation, think watering. Those typically come for us in the July timeframe, and we saw, as I think everyone on the call is aware, we saw a pull forward of that significantly back into June. So it was really just a shift as we saw, some of those categories move into the back half of June, and I'll let Richard expand a little bit further.
Yeah, and Brian, Billy's comments were spot on. There were signs of maybe a little more general weakness. The major driver were those heat-related categories. There were some signs of more general weakness. That had an influence on our guidance range. But let's talk about that range and kind of how we've started off the quarter. August has started off at a level consistent with what we would expect in a -3 comp result for the year. And August comps are better than July, right? And so there are a lot of factors that went into our guidance, but again, August has started off at a level consistent with what we'd expect in the -3 comp case.
That's very helpful. I appreciate all that. And the second question I have, I guess the bigger picture, but we were talking a lot about SRS. The acquisition now is closed. You're working on the integration. As we're watching Home Depot, this continued push into the professional market. I mean, should we be expecting you to be on exploring other acquisition opportunities there?
Well, Brian, as I said, SRS will continue their activity to fill in geographies and in segments, et cetera. Look, we just made a very large acquisition that we feel great about in early days of joint business planning and in value creation. We've always talked about utilizing M&A for growth opportunities, whether it's segments or geographies or customer bases, and expect us to continue to do that, but do not expect us to do anything, large, having just done this very significant transaction with SRS.
Thanks, Ted. Thank you very much.
Thank you.
Our next question comes from the line of Zach Fadem with Wells Fargo. Please proceed with your question.
Hey, good morning. It sounds like the pro spread widened versus DIY relative to Q1. Curious if there's any call out there. And then you mentioned positive comps for pros engaging in your new ecosystem. I'm curious what % of pros this now represents and how you'd expect this trajectory to trend now that SRS is under your belt.
Yeah, hi Zach, it's Anne Marie, and pros certainly outperformed do-it-yourselfers in the quarter. And as we have mentioned, we continue to invest in the pro ecosystem to accelerate growth and really drive and grow the share of wallet. I'll throw it over to Chip, and he'll speak a little bit about the investments and what we're seeing there.
Yeah, thanks, Zach. As we've mentioned in the past, we're investing in markets. And last year we had 14 markets we invested in. We'll be fully invested in 17 markets this year. And when we talk about investing in markets, it's a distribution supply chain capability play, foundational capabilities that help us better serve the pro, and then most importantly, our expansion of our outside sales team. We've seen positive growth in all of those markets since we've been investing, and we see that quarter after quarter. So we're very, very pleased with our progress over the last year and a half as we've marched, and we continue to march into 25 with the same progress and expectation of expansion.
Gotcha. And then, Richard, two quick ones. First, on buybacks and how we should think about the timeline around the return. And then second, on the long-term structural margins. You gave some good detail around the impact of SRS. Curious how we should think about the new high water mark in recovery over time.
Well, let's talk about share repurchases. So as we had announced, as part of the SRS acquisition, we financed the acquisition with $10 billion in bond issuances and then some short-term commercial paper raising. We are currently at a 2.6 times debt to EBITDA ratio. We like to see that ratio around 2.0 times. It's our intent to delever over time before we restart repurchases. That's going to take us likely into the year 2026, and we will obviously update our investors on how that looks over time. But that would be the kind of the current calculation. Sometime in 2026 we would return. And then from a long-term structural perspective, when we laid out our base and accelerated case, we said in the base case, look, we anticipate in the base case that we will always generate some degree of operating leverage, and that will always remain true. We're not going to talk about a high water mark, and we will continue to update you on our views. But for now, we're executing with exceptional expense management, exceptional management in cost of goods sold, and we're over-delivering really on the profitability we would have expected at this top line rate. So we are happy that we're running the business as it should be run, and we believe in those base case and accelerated cases that we laid out in June.
Got it. Thanks for the time.
Christine, we have time for one more question.
Thank you. Our final question comes from the line of Steven Forbes with Guggenheim. Please proceed with your question.
Thanks, everyone. Good morning. Maybe just a quick follow-up on SRS. Ted, you mentioned the growth, right, and broke it down 50-50 between comp, and I think you said lapping acquisition. So maybe just give us an update on where the branch count is today. And then how would you sort of summarize the capital spending needs of that business to fund both greenfield and acquisition-related expansion as it included in the CapEx guidance? Thank you.
Sure. The good news is on their greenfield operations, it's reasonably capital light. They lease a more modest-sized facility than a Home Depot DC would be. Think of this as a branch operation, and high turning inventory and variable pay for the sales force. So they tend to be break even in year one of operation. Similarly, when they make infill acquisitions, they have a great process to get that acquisition up on their ERP system. They literally do it over the weekend. They acquire a company on a Friday, and when that company opens up on a Monday, they are on the core ERP system of SRS. And that lets them get the operating process in technology synergies very quickly. And they have a track record of doubling EBITDA of acquired companies in the first 3 years of ownership. So it's reasonably asset light. It's quickly profitable on a greenfield basis, and it's multiples of earnings expansion on an acquired company. Since we've owned them, they've made, in fact, I think last Friday they closed on a small pool deal. They have a couple more under LOI. So these are modest infill acquisitions that they do in the normal course of business. So we're really excited to watch them grow. And again, it's reasonably asset light on greenfield, and the multiples they're paying, as you can imagine, on smaller regional companies, are generally in single-digit EBITDA multiples. So nice earnings profile on their acquisition case.
And Richard, maybe just a very quick follow-up as we think about sort of restating last year's numbers for intangible amortization. The full year amount for last year, we're looking at 15 basis points as a percentage of sales, or maybe correct me if I'm off there.
Yeah, the total amortization expense last year was $186 million for Home Depot for the full year of 2023.
Thank you.
And Steve, on branches, they're at about 775. So when we announced in March it was 760, you can see their growth profile. They've opened 20 plus branches just in the last few months. So these folks are super growth oriented.
Great to hear. Thank you.
Thank you.
Thank you. Ms. Jancy, I will now turn the floor back over to you for closing comments.
Thank you, Christine, and thank you, everybody, for joining us today. We look forward to speaking with you on our third quarter earnings call in November.
There we go. Home Depot earnings. This will be available as its own upgraded audio for better experience very shortly. What we're going to do now is we're going to end this video out. So we've got 2 premieres waiting to go. If you could tap the like button, subscribe, it helps support this channel. Thank you very much indeed. Let me just read some of the comments. Team Fusion just came in. Not sure who commented last night that J&J was going to go up today. That's a joke. I'm down 200 today. Not sure who commented last night that J&J was going to go up today. That's a joke. I'm down 200 today. Let's have a look. J&J 1.79. Well, what you got here today, quite simply, is people taking profit to buy growth. We know that the economy is going to go up. Just hold, stay where you are. As you can see, my portfolio is once again exploding again. We're up 1.56 over two grand, including the Roth and the main channel. What we've got this morning is CPI data coming in lower. Which is great. Interest rates are going to come down, which is great. Inflation is cooling all the time, which is great. People are taking profit out of J&J. That's perfectly healthy. And you're going to see all the stocks rally again. You can see we're green all across the board, 102, 384, all-time highs. That's what's happening today. I said yesterday that the market would be explosive today, either massively up or massively down. Well, and I was obviously very pro up because that's why I'm all in a margin, and it is massively up. What's happening now is perfectly normal, taking profits from J&J. It's a defensive stock. We don't need defensive now. We need growth. However, that doesn't mean to say you sell your defensive positions. It's why I own the S&P always. Can I show NVIDIA? Yes, I've got just 7 minutes to go before the premiere starts. NVIDIA is piling up today. Now, Matt, earlier on, I think his name is Matt, I said to him to set a stop trail order. I hope he did that. And I also hope that he's allowed enough gap for movement. You've got to look at the swings and make sure that you hold enough of a swing. If you are using a stop trail loss to get out of this stock today and take profit, that's fine. But you have to make sure that you allow for these sort of movements. Otherwise, you'll be out really quickly. Doesn't matter. He bought at 109. He's making money anyway. But even so, you just got to be really, really careful. Frederick, Martin, I see you're around 77,000. Is that the S&P 500? And how much did you invest from the start? Okay. I am 100% invested in the S&P only. 77,000 is my cash. I started with $5,000 3 years ago. I had no income for the first year and a half. I've only been earning money on YouTube now for a year and a half. So that's exactly what I've done. I'm worth 77,000 now in my brokerage account. I am worth 25,000 in my Roth IRA. All of it is in the S&P. Both accounts is the S&P. That's it, which is VU. I'm now worth 102,293. I am using margin. You can see my margin position there, 8147 171, which tells you I actually have $180,000 invested. Now, that's my full allocation, full balance. If you look over here on the brokerage account, it doesn't show the margin that you use. It only shows the profits and the loss. And you can prove that because if I share with you the S&P, if you look at the S&P is up 0.74 today. That's all. It's up 0.75%, but I am up, as you can see, 1.53, double because I'm in margin. Double. But it's double up and it double down. So just remember that. Okay. If you look at my buying power, you will see that margin total. I've got 125,000 available. I've used 81. So you can see my risk. My risk tolerance is very, very low. 48.5. I'm now paying it back. It'll be back over 50% when I get paid on the 21st of the month. My interest rate, you can see there, is 6.55. You can see there really isn't any risk here at all. Right. Okay. Well, there's always risk, of course, but it's managed in a way that I am extremely confident with. All right. Okay. Does that answer all your questions? Frederick, 5,000. Awesome result by Martin. Awesome result. Yeah, thank you very much indeed. All you got to do is just hold the S&P. It's not rocket science. What is perhaps rocket science, if you want to call that, the only decision you make is when to add more, when to buy margin. That's all. And the other thing you do, of course, is discipline. Many of you are in, out 1 minute, next minute you're out. I mean, Matt says he wants to trade today and take a profit. I wouldn't sell Nvidia. I'll take Nvidia to $200. But, the most important thing, if you want to call it rocket science, if you're in the hardest part, is just understanding what you own and not being stressed. I just bought the S&P 500 today. I'm following you, Frederick. Don't follow me. If you follow me, you don't understand what you're doing. You're just following me. I always try to encourage people not to follow me, but to understand why I'm doing what I'm doing and make your own decisions. Remember, I bought the S&P 8 months ago, so that's a very different subject. Also, I bought massively on margin when we had that crash, when Meet Kevin said the market's going down 60% and Donald Trump said that America would cease to exist within 48 hours. And then we had the carry trade. That's when I went all in. Didn't go in now. I'm not buying anything else probably ever again, because I only need to get to $1 million. That's my aim on this show live in front of you. Make this portfolio $1 million. That's it. $5,000 what I started with. Get to $1 million live on the show. I'm not going to be buying up now. I'm just going to be paying margin down. I'm not going to be buying up at all. What's the point of that? I went all in when it was down. Now I'm in. All I do is pay back margin. That's it. I will get to $1 million. I've got everything here I need to get to $1 million. Right. Now, guys, what we're going to do is I'm going to end the show, send you to a premiere. We do have videos, 2 premieres coming out. Hopefully you'll all join me for the live conversation. Let me customize this video, this live show now, and send you to the first premiere, which goes live in 1 minute. There you go. I've done that now. Excellent stuff. This is the premiere. We've got 2 premieres. The question I'm asking you, please join me live. It's live chat. You can keep the conversation going. Is Rumble honest and fair? YouTube, you can grow by just providing great content that people want, and you grow. On Rumble, we've just found out there are people being sponsored and paid. YouTube don't do that. Apparently, Matt Kors earns 40 grand a month. I can't believe that, but that's apparently what's said. But people are being paid, so it influences the platform. People say they want free speech, open and honesty. That's why Rumble was created. But in fact, if you're promoting people that you like, we've got Russell Brand, we've got Donald Trump, gets put on this a lot. I mean, are they all receiving money to stream to it? YouTube, I don't get paid, sponsored. No one on YouTube, even Mr. Beast doesn't get sponsored. You just earn your money by providing content that people want to watch. Is Rumble really fair and honest? Is it a scam? What do you think? I'm on it live 12 hours a day. I reported the earnings last night. It's a premiere is about to start. At the end of this special video premiere, and you can chat in the live chat, it'll go directly to a Robinhood breaking news as well. And then from there, it'll take you to the closing bell this afternoon when I'm back. And then we have earnings right after that with ACHV. If anybody else wants another earnings tonight, you have the next couple of hours to either super chat a video or a super thanks a video, $5 members only, and you can book in an earnings for tonight. I can do two at once, remember. Can you share how much you make from YouTube? Yes, I can tell you how much I make, and I often do. At the moment, it's about $2,000 a month, that's it. If you want to go on to certain websites like Social Blade, you can see as it grows. It's not completely accurate. It's about a 10%, maybe too much or too little sometimes, but it's a rough guide. You can see for yourself what I earn and what I'm doing, and I share it all on screen here with you. All right? Okay. So that's it. The show's about to end. Thank you ever so much on Rumble. Click the profile here, come into YouTube, and you'll find my live feed. I've got a premiere going right now. See you back this afternoon. Bye-bye for now. That's that ended. Okay, premiere is about to start. Let me send everyone now to the premiere. Please do join me. Live chat, live conversation. This premiere will take you right to the next premiere. This is a 10-minute video, followed by another 10-minute video, and then you'll go through to the... closing bell this afternoon. That's it from me. Thank you very much indeed. Join me now on the premiere and answer the questions. Let me know what you think. Leave comments below. I will see you back for the closing bell. Until then, as always, take care of yourselves and each other.